$742 more every month. For a smaller house, an older roof, a worse commute, less space for the kids, and only 15 minutes closer to the mother, Mark Henderson could no longer keep treating like a weekend problem. That was the number glowing on his phone at 6:17 in the morning. Not $742 more for a better kitchen, not for a bigger yard, not for a safer neighborhood, not for a house people would admire from the street. $742 more for help, for family, for the ability to drive his mother to a doctor's appointment without turning one visit into a military operation. Mark stood barefoot in the kitchen with cold coffee in his hand, staring at the mortgage calculator like it had stopped being a calculator. It had become a command. Stay where you are. Do not move closer. Do not change jobs unless the raise is enormous. Do not sell unless you are ready to surrender the old rate. Do not downsize unless you are ready to pay more for less. Do not rent again unless you are ready to feel like you failed. Do not admit that the house you bought to protect your family has started deciding what kind of son, husband, and father you are allowed to be. Mark checked the price again, then the taxes, then insurance, then the down payment, then the rate, then closing costs. Then he hit calculate one more time. Same answer, $742 more every month, for less house and less freedom. If the new house had been bigger, he could have blamed ambition. If the neighborhood had been better, he could have blamed status. If the kitchen had been beautiful, he could have blamed desire. But this was not desire, this was need. His mother was aging in the slow way parents often age. A prescription here, a form there, a specialist visit. A fall she insisted was nothing. A phone call that started with, "Don't worry, I'm fine," which always meant she was not fine. Moving closer should have been the responsible choice. Instead, responsibility had become unaffordable. Mark Henderson was not reckless. He had not missed payments. He had not bought a mansion. He had not gambled the family savings. He was 44 years old, an operations manager at a logistics company, married to Claire, father of 2 children, son of an aging mother, and owner of a house that used to make him feel like he had finally become the man everyone expected him to become. From the outside, his life looked stable. That was the horror. The trap did not begin when Mark lost control. It began when everyone congratulated him. 7 years earlier, the house had felt like proof. The lender approved them. The agent praised the neighborhood. Claire liked the schools. His father said, "This is how middle-class people build wealth." Co-workers told him he was smart to get in before prices went even higher. And for a while, they were right. The first night after closing, the house was almost empty. 2 camping chairs sat in the living room. A pizza box rested on the kitchen counter. The kids ran from room to room, laughing because every sound echoed. Claire walked through the hallway slowly, already placing the sofa, the bookshelves, the photos, the holidays, the sleepovers, the life that would happen there. Mark stood in the kitchen and touched the counter. Mark and Claire had taken extra shifts, kept old cars, packed lunches, skipped vacations, and told themselves discipline would eventually buy peace. The house was supposed to be the prize. That is why the mortgage cage is hard to see. It does not arrive looking like failure. It arrives looking like adulthood. Rent has its own cage too. Rising payments, unstable leases, impossible deposits. The feeling that ownership keeps moving farther away every time you save a little more. In the United States, many homeowners are locked into older mortgage rates that protect the monthly payment but punish them for leaving. In the UK, the cage often works differently. A fixed deal feels manageable until the remortgage letter arrives and the same home suddenly asks for a bigger monthly sacrifice. Around 1.8 million fixed-rate mortgages in the UK are due to expire in 2026, which means many families will not be moving at all. They will simply be reopening the same front door to a more expensive house. Different doors, same pressure. Housing stops being shelter. It becomes a decision system. $742 more for a smaller house, only 15 minutes closer to his mother. Maybe the house was not serving his life anymore. Maybe his life was serving the house. The first wound was the visible payment. That was the number Mark had obsessed over when they bought. The number on the lender's screen. The number he and Claire whispered about at night. Can we handle it? Can we stretch? What if taxes are included? What if insurance is included? What if the bank says yes? The payment feels like truth because it is clean. It fits on a screen. It looks precise. It gives you the illusion that the house has revealed its cost. But the payment is only the entry fee. A house keeps charging after the mortgage clears. Through the county, through the insurer, through the utility company, through the contractor, through the roof, through the water heater, through the driveway crack that was not urgent until one winter made it worse, through the dishwasher that dies the same month the car needs tires. At work, Mark solved routing problems, staffing gaps, supplier delays, angry clients, and delivery deadlines without looking rattled. At home, a dental bill could change the week, a car warning light could ruin the month, and a roof quote could make him physically tired before the contractor finished talking. The lender had checked whether the bank would get paid. Nobody had checked whether Mark's life would still have room to breathe. He thought the payment was the cost. Then life kept charging after the payment cleared. The visible payment was only the first wall. The next wall looked like protection because it came disguised as one of the smartest decisions he had ever made. The second wound was the low-rate leash. Mark's old mortgage rate used to feel like safety, and in one way, it was. He had locked in a rate that people buying today could only envy. Friends told him, "You'd be crazy to give that up." His father called the rate gold. A co-worker said, "You're trapped in a good way." Mark laughed too. Then he opened the calculator. That was when the joke stopped being funny. Protection becomes prison when leaving it destroys your options. The smaller house closer to his mother should have been the mature move. Less space, less maintenance, more ability to show up, more ability to be a son before guilt turned into regret. But the new rate changed everything. His old payment belonged to one world. The new payment belonged to another. His mother got older. His children got older. Claire got more tired. His job became more demanding. But the mortgage sat there like a rule from a previous version of reality. The low rate had protected him from the market. Now it protected the house from him leaving. Once Mark saw it, he saw the same trap everywhere. A neighbor stayed too far from his grandchildren. A friend turned down a better job because the raise died inside the new mortgage. The old rate felt like a gift until it started giving orders. Stay, wait, delay, absorb. Higher interest rates do not only change a spreadsheet, they change what people can say yes to, because every extra dollar claimed by a mortgage is a dollar not available for care, savings, repair, or escape. Mark thought the low rate made him free. It only made staying cheap. Those are not the same thing. The rate owned the exit, so he searched for another escape, downsizing. And that was where the third wound appeared, the moving penalty. Downsizing was supposed to be the release valve. If the house became too much, they could sell and buy smaller. If his mother needed help, they could move closer. If work changed, they could relocate. That was the story in his head. The market had changed the story. On Saturday afternoon, Mark and Claire sat at the kitchen table with two laptops open. One screen showed their current house. The other showed the smaller house closer to his mother. Claire had a legal pad. Mark had the calculator. Current payment. Painful but familiar. New payment. $742 more. Smaller house. Older roof. Worse commute. Only 15 minutes closer. Same salary. Same family. Less margin. Then came the costs around the move. Agent fees, closing costs, repairs before listing, repairs after buying, moving trucks, inspection fees, higher insurance, possible tax changes, school disruption, new commute patterns, new problems hiding behind fresh paint. Claire tapped the pen against the legal pad. "So we pay more," she said, "to get less house, less savings, and maybe 15 minutes? Mark stared at the calculator. "On a good traffic day," he said. Neither of them laughed. Downsizing started to look less like relief and more like paying thousands of dollars to be humbled. Move and lose the old rate. Stay and absorb the leaks. Sell and pay the transaction costs. Rent and enter a brutal market. Refinance and accept a worse payment. If every exit hurts, you are not choosing freely. You are choosing which wall hurts least. Mark felt it when his mother called and said, "Don't worry about coming tomorrow. I know it's a long drive." She meant it kindly. That made it worse. Moving was supposed to be the escape. Then Mark learned every escape had a price tag, and the next price tag was not in the listing. It was waiting inside the walls. The fourth wound was the ownership leak. Homeownership is sold as building equity. Sometimes that is true, but homeownership also leaks, not symbolically, literally. One Thursday evening, a roof contractor stood in Mark's driveway with a tablet in his hand. He did not say emergency. That was the cruel part. He said, "You've probably got a couple of years." Mark heard something else, a countdown without a date. Then the insurance renewal came in higher, then the property tax assessment, then the water heater, then the fence. Then Claire said, "We really need to do something about the windows before next winter." Mark nodded because she was right. He hated that she was right. A simple homeowner rule says you may need to save roughly 1 to 4% of a home's value every year for maintenance and repairs. On a $400,000 house, even the low end is $4,000 a year, which meant Mark and Claire's missing roof reserve was not bad luck. It was a bill they had failed to name. A real house ages while you sleep. The shingles age, the plumbing ages, the wiring ages, the appliances age, the tax bill changes, the insurance market changes. Ownership did not always attack in giant bills. Sometimes it bled $29, $64, $118 at a time. Then, every few months, it delivered a number large enough to remind him who was in charge. Mark's mistake was not buying a house. His mistake was thinking the purchase price was the price. The roof contractor had not insulted Mark. The insurance company had not yelled. The county had not threatened him. But together, they made him feel like he was failing a test nobody had shown him before the purchase. The house keeps charging after the purchase. And the worst part was not the repair bill. The worst part was realizing the house had redesigned the entire week. The fifth wound was the lifestyle cage. This one is easy to miss because it hides inside normal life. The house quietly organizes the family budget. The location decides the cars. The school district decides the price. The activities decide the schedule. The commute decides the exhaustion. The exhaustion decides the shortcuts. The shortcuts become spending. The spending becomes normal. Mark and Claire had chosen the suburb for sensible reasons. Good schools, more space, a yard, a safer street, a place where the kids could grow. Nothing about that was stupid, but the house came with a lifestyle attached. 2 cars were not luxury, they were survival. The grocery store was not walkable. The kids' activities were scattered across town. Claire's job was in one direction. Mark's job was in another. His mother was 38 minutes away on a good day and over an hour away when traffic turned cruel. The house did not simply sit at the end of a street. It pulled on every calendar square, every fuel stop, every rush dinner, and every quiet argument that began when 2 tired adults were really fighting the schedule instead of each other. A house can be affordable in the mortgage calculator and expensive in the life it requires. That sentence would have sounded dramatic to Mark when he bought. At 44, it sounded like Tuesday. One Tuesday night, Claire opened the fridge, stared into it for 10 seconds, and closed it again. "We can make pasta," Mark said. Claire looked at the clock. One child needed homework help. The other had practice clothes in the dryer. His mother had left a voicemail. Mark still had 3 work emails to answer. Claire said, "I can't do another whole thing tonight." So they ordered takeout. Not because they were careless, because Tuesday had no margin. That is how the lifestyle cage works. You stop saying, "The house is controlling our spending." You start saying, "This is just what life costs now." The suburb had not betrayed them. It had done what many suburbs do. It gave space and demanded transportation. It gave school access and demanded a housing premium. It gave quiet streets and demanded distance. The mortgage payment was the official bill. The lifestyle was the hidden subscription. And the next wound was the worst kind of subscription, the kind paid by 2 exhausted people. The 6th wound was the 2-income machine. Mark and Claire had built their household around 2 paychecks, not recklessly, normally. The lender qualified them using both incomes. The school district was chosen with both incomes. The cars were justified by both incomes. Groceries, insurance, utilities, repairs, activities, retirement contributions, child expenses, and family obligations all assumed the same thing. 2 adults would keep earning, commuting, staying healthy, tolerating work, avoiding layoffs, avoiding burnout, and moving. That is not a safety plan. That is a machine with no spare part. A 2-income family can look stronger because more money comes in. But if every dollar of both incomes is already assigned, the family has not gained freedom. It has raised the height of the fall. Mark saw this one Thursday afternoon at work. His boss mentioned that the company was reviewing regional operations. Nothing immediate, nothing confirmed, just reviewing. The kind of sentence managers use when they cannot say more but still make everyone start worrying early. Mark walked back to his office and closed the door. For the first time, he did not think, "I could find another job." He thought, "How long before the house notices?" That thought scared him, because the mortgage had become the silent manager above his actual manager. Claire had her own version of the same pressure. One night she came home late, dropped her bag near the kitchen chair, and stood there without taking off her coat. Mark asked, "Bad day?" She said, "I'm just tired." That was all. But tired meant more than tired. Tired meant the job was not just income, it was load-bearing. Tired meant she could not simply step back. Tired meant the mortgage had entered the marriage without being invited into the conversation. Later that night, she sat at the kitchen table while Mark moved numbers around on the laptop. He lowered the insurance estimate. He stretched the term. He adjusted the down payment. He tried a different calculator. Claire watched him for a while. Then she said, "So if one of us breaks, the house breaks too." Mark wanted to argue with the word breaks. He could not, because she was right. The house had become a 2-income machine, and machines do not care which part is exhausted. That is why Mark's private question mattered. "I did what I was told, so why am I still stuck?" The answer was waiting in the last wound, the one bigger than Mark's kitchen table. The 7th wound was the system wound. Mark made mistakes. He underestimated repairs. He trusted the approval amount too much. He assumed two incomes would stay stable. He treated a low rate like permanent safety. He let ownership become part of his identity. But Mark did not build the whole cage. He entered a housing system already designed to squeeze normal people from multiple sides. He did not use words like supply, zoning, lending structure, or affordability ratio at the kitchen table. He just saw the result. Every home close to his mother cost too much. Every cheaper home moved him farther from the reason he was searching in the first place. People need homes near jobs, schools, safety, transport, and family. Many of those places do not have enough homes people can actually afford. When homes are scarce where people need to live, prices rise. When prices rise, buyers borrow more. When buyers borrow more, households become fragile. The house stops being only shelter. It becomes a ticket to schools, safety, opportunity, and not being left behind. That is why the housing cage is emotionally powerful. It hides financial risk inside love. Mark did not stretch only for square footage. He stretched for his kids, for Claire's feeling of safety, for a neighborhood where the family could breathe, and because the culture told him a responsible man provides a stable home. One night, Mark scrolled through listings he could not afford and read comments from strangers saying, "People should just buy cheaper homes." He closed the app. Because cheaper where? Farther from work? Worse schools? Less family help? Longer commute? Less safety? A house is not cheap if it extracts the rest of your life in distance, stress, and time. The system checks the lender's risk first, not your life. A mortgage underwriter asks whether the bank is likely to get paid. That is not the same as asking whether your household will remain healthy. Mark had confused them. Approval felt like permission. Permission felt like wisdom. Wisdom felt like safety. But bank approval is not a blessing. It is a business decision. The bank asks, "Can this borrower probably make the payment?" You have to ask the harder question, what does this payment make impossible? That question arrived late for Mark. But late is still better than blind. The visible payment, the low-rate leash, the moving penalty, the ownership leak, the lifestyle cage, the two-income machine, the system wound. Mark did not escape by naming them. Naming is not magic. But confusion had been expensive. Clarity was cheaper. And clarity began one night at the same kitchen table where the problem first became visible. The kids were asleep. The dishwasher was running. Claire sat across from Mark with her laptop open. Mark had a legal pad. The mortgage app was open again, but this time he did not look at it like the judge. He looked at it like evidence. They were not asking, "Can we afford the payment?" That question had failed them. They were asking, "Can our life survive the house? Not just this month, not just if both paychecks arrive, not just if nobody gets sick, not just if the roof waits. Can our life survive the house when life acts like life?" That became the beginning of the 5 tests before a house owns you. A decision system. Because the mistake is not wanting a home. The mistake is letting the home become the boss before you understand the contract. The first test was the real payment test. Your mortgage is not your housing cost. It is only the headline number. The real payment includes taxes, insurance, utilities, repairs, maintenance reserves, deductibles, moving costs, and the repair you keep assigning to a future version of yourself. Mark wrote it down slowly. Mortgage, property taxes, insurance, utilities, roof reserve, appliance replacement, insurance deductible, higher commuting costs, repairs before they become emergencies. The list looked ugly. That was the point. A house does not become affordable because you hide the ugly columns. Claire got up from the table and opened the narrow kitchen drawer where they kept old receipts, tape, batteries, school forms, and one folded sheet labeled house stuff. She flattened it beside Mark's laptop. Loose fence, old windows, water heater age, driveway cracks, gutter cleaning, dryer problem. She put her finger on the water heater line and said, "This is not someday. This is just waiting." Mark looked from the paper to the mortgage app, and for the first time the app looked incomplete, like a menu showing only the cheapest item while the real bill sat in another room. The real payment test did not make Mark happy. It made him honest. And once the real payment was visible, the next test became unavoidable. Because the question was no longer whether 2 incomes could carry the house on a normal month. The question was, what happened when one of those incomes blinked? The second test was the 1-income survival test. If one income drops for 6 months, does the house bend or break? Not forever. 6 months. Can it survive a layoff, a medical issue, burnout, reduced hours, a bonus disappearing, overtime drying up, a parent needing care? At first, Mark and Claire did not like the answer. The house could survive for a little while, but not calmly, not without draining savings, not without stopping retirement contributions, not without using credit cards, not without turning every dinner conversation into a budget meeting. Claire stared at the numbers and rubbed the bridge of her nose. The dishwasher hummed behind them. One of the kids coughed upstairs. Mark had 3 columns open on the laptop. Normal month. Claire pause. Mark pause. In both pause columns, the same account started shrinking before the 3rd month. Claire pointed at the emergency fund and said, "So this is not really emergency money. It is mortgage protection money." Mark wanted to correct her. Instead, he turned the laptop slightly toward her and said, "You're right. Painful information is still information. They rebuilt the emergency fund. They cut subscriptions they barely used. They delayed upgrades that were mostly about appearance. They created a repair account and named it clearly so it would not be mentally available for random spending. None of this made them rich. It made them less fragile. Because a house that needs 2 perfect incomes is not a home. It is a hostage situation with curtains. And once Mark accepted that, the next test hit even harder. Because income was not the only thing the house had trapped. Movement was trapped too. The 3rd test was the mobility test. Before you buy, calculate how you leave. That sounds negative only if you believe life will always cooperate. Life does not cooperate. It changes jobs, health, parents, schools, marriages, energy, interest rates, rent, and what your children need from you. The mobility test asks what happens if life demands movement. Not if you want a nicer kitchen, not if you get bored, if life demands movement. On a rainy Tuesday, Mark and Claire did the test the way they should have done it years earlier. They drove from the smaller house near his mother to Claire's office, then to the kids' school, then toward Mark's warehouse district. The windshield wipers scraped across the glass. Brake lights smeared red across the road. Claire checked the time on her phone and said, "This is worse than Saturday." Mark nodded. The house was closer to his mother, but farther from almost everything else. By the time they pulled into their driveway, the 15-minute improvement had turned into 2 new problems. They wrote down their real exits. They could stay, they could sell, they could wait, they could rent the house out. They could move closer to his mother only if they accepted a major monthly increase or found a much cheaper place than they wanted. None of the exits were clean, but invisible exits are worse than ugly exits. It killed the fantasy that staying was automatically safe and moving was automatically failure. Then Mark faced the test that hurt his pride most. On paper he was doing well. On paper he had wealth. But paper wealth was not helping Claire sleep. The 4th test was the equity access test. Equity is real, but real does not always mean usable. If he sold, he still had to live somewhere else. If he refinanced, he would likely lose the old rate. If he borrowed against the house, he added another payment. If he left the equity untouched, it looked impressive but did not help with Tuesday. For 2 weeks he imagined keeping the house and renting it out while moving closer to his mother. It sounded smart. Keep the low rate, build wealth, let someone else pay the mortgage. Then he ran the real numbers. 1 vacant month wiped out the margin. 1 major repair created a loss. Property management reduced the cash flow. Insurance changed the calculation. A bad tenant could turn the plan into a second job. One evening, Mark printed the rental numbers and placed them on the table beside a mug with a chip in the handle. Claire read quietly, then circled 3 lines in blue pen: vacancy, roof, management. "This is not passive," she said. Mark leaned back and looked at the ceiling. He had wanted the rent idea to save them. He had wanted it to be the clever move, but the paper did not care about how clever he wanted to feel. The house would still be asking for money. It would just be asking from farther away. Sometimes the smartest move is not the move that sounds richest. It is the move that does not make your life more fragile. His house could be valuable and still not be useful at the exact moment his family needed flexibility. That truth opened the final test. And this one did not live in the calculator. It lived in Mark's ego. The 5th test was the identity test. Are you keeping the house because it serves your life or because leaving would embarrass you? Mark had to separate his worth from the house, from the neighborhood, from the square footage, from the school district, from the fact that he owned instead of rented, from the idea that moving backward on paper meant failing as a man. That belief had been expensive. It made him tolerate pressure too long. It made him treat renting as humiliation instead of a possible tool. It made him treat downsizing as defeat instead of design. Claire saw it before he did. One night, after another conversation about his mother, Mark said, "I just don't want to feel like we worked this hard to go backward." Claire closed the laptop. She did not raise her voice. She just asked, "Backward from what?" Mark did not answer, because the question was clean. Backward from what? From a house that strained them, from a payment that trapped them, from a life that made visiting his mother feel like a logistics problem, from a version of success that looked stable from the street and brittle from the kitchen. The room went quiet after Claire's question. The kids were asleep. The dishwasher had stopped. Mark could hear the refrigerator hum, the small electric sound of ordinary life continuing while his pride tried to defend itself. He looked at the hallway wall, at the family photos, at the first day of school pictures, and the vacation they had almost cancelled to protect the budget. Then he said the sentence he had been avoiding. "I think I'm scared people will think we failed." Claire reached across the table and put her hand on the legal pad. "They don't pay this mortgage," she said. That was the moment Mark stopped defending the cage. Not completely, not instantly, but enough. Once he saw that the house had become part of his identity, he could finally ask better questions. What do we actually need? What are we protecting? What are we pretending? What would we choose if nobody could see our address? That last question was brutal. Mark did not sell the next morning. Real life is rarely that clean. He and Claire stayed in the house for the moment, but staying changed. It was no longer blind staying. It was chosen staying with conditions. They built a repair reserve. They made a care plan for his mother that did not depend on vague guilt. They stopped saying yes to every child expense automatically. Months later, Mark was in the break room at work when a younger analyst named Ethan asked him a simple question. "Do you think I should buy now or wait?" Ethan had his phone open to a listing. 2 bedrooms, fresh paint, tiny yard, monthly payment circled in red. Old Mark would have given the old speech. Get in if you can. Renting is throwing money away. Real estate always wins eventually. Instead, Mark looked at the number and asked, "What does it cost to leave?" Ethan frowned. "What do you mean?" "I mean repairs, closing costs, commute, one income, bad tenant if you rent it out, bigger payment if rates move. What happens if your life changes before the house makes sense?" Ethan looked back at the listing. The excitement did not disappear, but it got heavier. "Good, some truths should," Mark said. "Before you buy, calculate how you leave. Lenders qualify payments. They do not qualify marriages. They do not qualify burnout. They do not qualify aging parents. They do not qualify job changes. They do not qualify the emotional cost of being unable to move when life asks you to. That is your job. And if you do not do it, the mortgage will do it for you." The mortgage cage is not an argument against home ownership. That would be too simple. But only if you understand what you are buying. You are buying a payment schedule. You are buying exposure to taxes, insurance risk, repair risk, mobility risk, a lifestyle pattern, and a set of exits, some cheap and some punishing. And if you buy without understanding those exits, the house can become a polite trap with a welcome mat. That is why the old question is dangerous. Can we afford the payment? That question is not enough. A better question is, can our life survive the payment? Can it survive if taxes rise, insurance jumps, one income pauses, a parent needs help, the roof fails, you need to move, rent becomes smarter for a season, or the job that pays for the house begins to damage the person living inside it? Affordability does not mean the bank approved you. Affordability means your life can survive the payment. That is the line Mark wished he had understood earlier. Months after that first morning, Mark opened the mortgage app again. Same kitchen, same early light, same coffee. He looked at the mortgage balance. He looked at the interest rate. He looked at the estimated value. Then he looked at the repair reserve, the emergency fund, the exit notes, the one-income survival plan, and the list of choices they had stopped making automatically. The house was still a burden, but it was no longer a mystery. That distinction matters. A burden you can see can be managed. A burden you worship will manage you. Mark did not hate the house. He hated the obedience it had demanded while pretending to prove he had succeeded. A house is not automatically freedom. A mortgage is not automatically wisdom. Equity is not automatically safety. Ownership is not automatically adulthood. Staying is not automatically strength. Sometimes the bravest financial move is disappointing people who are not responsible for your payment. That is what changed in Mark. He stopped asking housing to prove his worth. He started asking whether housing served his life. One Saturday morning, he drove to his mother's house without pretending it was easy. Traffic was bad. The visit still took half the day. The whole situation was still imperfect. But this time, when his mother apologized for needing help, Mark did not tell the old lie. He did not say, "It's fine." He said, "We're figuring it out." That was more honest, and somehow more peaceful. Later that evening, he came home and found Claire at the kitchen table. The kids were in the other room. The dishwasher hummed. The same mortgage app sat open on his phone. Claire looked at him and asked, "Are we protecting the house or are we protecting our life?" Mark did not answer quickly. A few months earlier, he would have defended the house. He would have talked about the rate, the equity, the schools, the neighborhood, the shame of going backward. But now he heard the question underneath her question. What is the house for? That is the question most people never ask clearly. They ask what they can borrow, what the payment is, whether the neighborhood is good, whether prices will rise, whether renting is wasting money, and whether they are falling behind. But they rarely ask what the house is allowed to take. How much sleep, how much marriage, how much mobility, how much career choice, how much ability to care for a parent, how much margin for a child, how much room to breathe. A house that protects your life is shelter. A house that consumes your life is a cage. And the line between those two is not always visible from the street. The cage survives on confusion. It survives when you compare your private pressure to your neighbor's exterior. Treat bank approval as a life plan. Ignore repair risk. Assume two incomes will never shake. Worship a low rate. Call every exit failure. And let the house define the adult you are allowed to be. But once you name the wounds, the spell weakens. The visible payment, the low-rate leash, the moving penalty, the ownership leak, the lifestyle cage, the two-income machine, the system wound. Mark did not escape all of them. Most people do not. But he stopped pretending the cage was normal just because millions of people were standing inside it with him. That may not sound like victory. It is not. It is the first honest step. Not freedom, not rescue, clarity. The house was sold as freedom, stability, adulthood, and success. For some people it becomes that. For others it becomes a payment with rooms attached. So before you chase the next house, defend the current house, shame yourself for renting, worship a low rate, or call every exit a failure, ask the question Mark should have asked sooner. Not, can I afford this? Not, will the bank approve me? Not, will people think I made it? Ask the question that cuts through the fantasy, the question that exposes the real cost, the question that turns housing back into a tool instead of a master. What does this payment make impossible?